What's going on, guys? John here, and today we're going to be going over a little bit of Amazon trade recap we had last week as well, just kind of giving a quick overview of what I'm taking a look at this week, at least initially. Before we get started, go ahead and smash that subscribe button, and if you want to, feel free to join the channel. Just a cool little logo by your name shows that you like what we're doing. So let's get into it. Amazon. So let's go to the Amazon trade. So May 21st, we went ahead and bought Amazon calls first thing in the morning at 9:33 for 70 cents. So bear with me because there is a little bit of overlag, but basically 9:30 happened on this candle down. So as always, one thing that just helps for when you want to go and backtrack these trades, you can just kind of make just the line of the low where everything happened. And obviously, guys, I didn't buy the perfect low, but all these wicks, as always, I love to focus on. So I'll just kind of give you just quickly what I was looking at here. So I had just a pretty generic range in there, and also had two huge ones just kind of on the bottom, that 178, but we weren't going to get that low. And same thing, just a big move, 183. And you can always kind of just keep extrapolating these out to kind of get your generic pivot points or resistance and support points that are important. The longer and the bigger the wick, the more relevant the points are. So obviously, this just huge one up and down, very important. This deep down one to 175, very important, which unlikely we get down here this week, but we're just going to go over what we were looking for this trade. So let's just clear all these off right now and just see that we were kind of looking where all this kind of consolidation was happening. And we can even just take it over here further. And I didn't buy the perfect low, of course. So keep that in mind also. I actually bought closer to 181, which was kind of right in all this area right here where we saw like, hey, some low wicks up and down, and you can switch it to the daily to make it clearer or less clear. But what I was trying to capture, and this is why I didn't sell those trades right away, is, and I posted this on our main feed, is this channel that this triangle is forming here. It's trying to break out Amazon. So if we could ever get like that second day rally, we could really see some nice uptrend in Amazon. And we're just kind of just looking for an escape above and just a shot. So I'm going to go ahead and show you just a little bit more detail what I'm talking about here, since it's already drawn up nice. So here's just Amazon arbitrary support. Just picked the bottom of the candle because there were some repeating zones here. It could go lower. I don't anticipate it going all the way down to 175, but you never know. If it just keeps getting longer and longer, inevitably something's going to happen, either break to the upside, break to the downside, because it keeps winding up here. But what we're really looking for is, you can see here's that May 21st where it bounced up and we had our 150% move. So I'll just kind of scroll down and show you just right off the open we got it. And I think it was due to that positive news. So Amazon plans to give an AI Alexa overhaul. So got that nice little jump for us. Got the 120% in the morning, got up to 150%. Everybody did really good. And the reason I didn't sell out of everything is because I was trying to see us, and at the time it stopped a little bit earlier, but still generically the same place. I was trying to see us get that breakout above that 186, and then it kind of really starts to open things up to the upside back to another 190 test. And that's what I'm really trying to get here. And that's why I said, hey, we could see a $10 move in Amazon because 190 is kind of like where that last sell off happened. So if we get that breakout here, and it's getting tighter, so like you can see, it's only 180 to 182 now. So we only really need a $2 or $3 move to kind of start that potential breakout for us. So I'm really dialed in on Amazon this week again. The premium's been giving us really good opportunities. So I'm going to just try to give you guys some quick supports and resistance to look for kind of heading into this week. So obviously we want to see the longest wicks down. So this one is much more valuable than these lower ones. 180 is just going to be a psychological level. So you can kind of keep 180 in mind, but I like that. Kind of 180.78, just kind of, and same thing all the way down to 180.08. So somewhere in that range, we could see a dip and a bounce. But kind of these wicks right here, I'm much more interested in. So for me, we fall under 180, everyone's going to start panicking. 178.5. Probably a good chance that I'm going to step in that area and just kind of do a little bit of buying, see how it goes. Obviously, if I don't post it, you guys know this level here because of a trade that I post, I'm looking for something a little bit more high probability. I'm looking at some other stuff going on in the market too, but I might just take, even if I don't post it, a small portion by myself at 178.5. But kind of this big giant wick here, I really, really like it. Same with another repeater there. So 178.5, kind of keep in mind on there if we start falling down. I feel like we're probably going to do something a little more like this, where we might till the 30th get a few days where we might not really get anything, but not ready to call it yet. That's why you get out there and you trade every day. But kind of keep that in mind. The 180.75, 180, if that area holds, can be good. And then kind of be watching for that big dip down to 178.5. And again, if we really start selling for whatever reason, which we haven't been, love 170 for 0.8, 175. That one starts to get real interesting too. So you could do like kind of smart dip, really smart dip, genius dip. But just keep in mind, all these possibilities are kind of open. But if we start breaking down, like that's what I'm saying, if we reject on this wedge and just start falling, this is kind of how far we can start falling. Same way you can get that 180 move up, you get that 175 move down. So just a lot happening. It seems like we're kind of getting to the conclusion of this wedge. So kind of be on the lookout for Amazon, at least from that perspective. Kind of ran a little bit long on that, so sorry if I wore you guys out. And then just kind of just a quick look at SPY. I just have this. We got a little wedge forming from the other week, so a little moon doom. So which looks like we're breaking out to the upside. Kind of same thing. Think Amazon calls. Looks like we're breaking out to the downside. Think Amazon puts. But same thing. Range hasn't exactly been huge. Like we'll just see where we've been trading at. Just sort of a lot of the activity, kind of only from what a $3 range, but it had those big wicks up and down. So we'll count them just to kind of capture it here. So 133, 125. So pretty decent, but I think inevitably this should send us either through the top of the range or back under the range based on the conclusion of this wedge. So just kind of keep that in mind for SPY. If you're looking to do any 0-day action, like obviously this 153.14, obviously it's hard to short at all-time highs. So don't know if you want to lean into that too much. But if you want to buy puts on a 0-day, I saw someone asked about SPX, you give it a try. Or same thing, if you break above, try the calls. I don't like to chase the 0-day options with you all because, number one, it's very fast and very dynamic. And when those options go down 50%, they don't necessarily always come back, as opposed to the swing trades I like to share with you guys. I'm looking at a much bigger idea and a much bigger concept. So I try to keep my trades that I share with you guys more focused on swings because the idea is usually always intact, right? So the 0-day options, you can get a lot of percent gains, but you shouldn't really be throwing a lot of money in. But I know a lot of you guys, with money you have to trade with, doesn't matter if it's 0-day option, doesn't matter if it's a Monday week-long option. If you only have that amount of money to risk, that's all you have. So either you're going all the way in on 0-day, you're going all the way in on a swing trade. I'd rather tee you guys up for a swing trade. So SPY just kind of should see some conclusion to it if you wanna dabble in it. But for me, focused on Amazon, just gonna trade what's in front of me. Hopefully that little session helped. If you have any questions, feel free to drop below. I know last video I didn't answer a ton, but I'll do better on this one. You guys all rock, and we'll see you next time.